NVIDIA, Tesla, and Amazon, the three worst performing of the Magnificent Seven over the last three trading sessions, all down between 11 and 13%. Only Meta is positive since last Thursday when the most recent selling bout started. Joining us now on what he's watching in the tech sector, Ray Wang, Constellation Research principal analyst. Good morning again. Good to see you. Ray, would you buy everything right now on the pullback or buy nothing?
Well, I was going to wait to see what was going on with some other data points to see if we were really in full panic mode or if we would actually come back. And it was good to see in the morning that, we had a pullback. People were actually coming back to their senses and realized that, one data point wasn't going to trigger everyone into an overcorrection. But it's a good time to look into this. And I would say that there are a few stocks that actually are actually winning in AI. And NVIDIA, of course, is still going to be there. We got to wait till August 28th to figure out how they're going to, what their forecasts for Q3 are going to be. But more importantly, they're still going to be one of the winners. You mentioned Amazon. That one's going to be interesting to watch in the long run because we're seeing if the retail sector does come down and there's pullback in terms of consumer spending, I'd be worried about Amazon. But there are some interesting things. We are seeing people make money in AI. And Uber, for example, yesterday said, look, better price matching, better ride batching, algorithmic improvements have actually improved their ability to actually get more profitable. And of course, Meta has done something great with their open models because what it's actually allowing them to do is open source their LLMs, but allow them to get more data so they can improve their precision targeting for ad growth, along with their exponential efficiency. So Meta is a great stock in that regard. And of course, NVIDIA is a good one in terms of what you've mentioned.
So, Ray, when we go through periods like this that, in this case, maybe it's based on a carry trade or currency fluctuations, do you just ignore it? Do you just focus on what you know about each one of the companies individually? Or do you worry about, well, the multiple's kind of rich and, if depending on what happens in the macro world, everything could be marked down. How do you do it? Do you just look for opportunities to get long and what you like?
Well, right now, it's really about opportunities to get long on the AI revolution, and you have to figure out which companies will make money in AI. A simple example, Adobe's making money on AI, selling AI software. Microsoft, we're going to see how they do well in terms of what apps they're selling. Oracle has done a great job there. Palantir is a company that's been in the AI space. C3 has been in the space, and what we want to do is see, who's got the revenue growth, right? It always comes down to the forecast of what's out there, but it is individual stocks. But the macro was a bigger issue. I mean, that notion of debt that was being discussed earlier is true. China is in serious trouble, and that's a market, with lower population growth and the debt bubble, they're going to be in a tough spot. They're actually going to look like Japan in 20 years, and Japan got crushed because MMT doesn't work. And so a U.S. jobs number that's just one data point isn't, something that's going to take down the U.S. market, but the sentiment was pretty bad yesterday.